I think Euro USD.
Okay.
Yes.
How about you, Mr. Christopher?
Yeah, for me, let me even open my chart first,
Okay,
because
okay, no problem.
I'm doing from my tab. I don't know if I can share my screen too. This way you are doing
Okay,
on my tab, or do I need to
no,
use my laptop instead?
okay, no problem about that. You are welcome, Tech. So I don't know if you can hear us. Just signify that you can hear us so that Mr. Sam Tech, can you hear us? Okay. So
Okay,
okay.
I'll do
Let's,
GBP USD. GBP USD. I can share
okay,
my
give it.
screen.
Okay, okay, no problem, no problem. Let me round up with the USDJPY, then the next person will analyze this one, the another person will analyze like that. Okay. So you
Okay.
can just yeah, you can just mute your mic so that recording will be clear for the people that are not yet. Okay, so to let's get the buyer started. So like we discussed yesterday, it all begins from external range. Once price has taken an external range, it will definitely trade to internal range. Once price has taken an external range, you look for the nearest internal range liquidity. Once price has taken the external range liquidity, you look for the nearest internal range liquidity, like that. From external range to internal range, from external range to internal range, like that. So, and as we discussed it yesterday, on your monthly time frame, on your higher time frame, from weekly time frame upward, what you are going to be looking for is external range, like buy side liquidity gets taken out or sell side liquidity gets taken out, and then you look out for your nearest drawn liquidity. You understand? So okay, let's take for example now. Okay, I'm on the 12-month time frame now. So if you check very well now, you see that this buy side liquidity gets taken out. And where is your next drawn liquidity? If you want to position for this trade now, it will be your fair value gap here. Once price has taken the external range liquidity to come for the internal range liquidity. If you check very well, there's another internal range liquidity, another fair value gap here. So that's how the market just work from external range to internal range. So if we are framing our bias now on the higher time frame, like from weekly time frame above, we'll be looking at for a liquidity sweep, which liquidity gets taken at then the nearest draw on liquidity. That's what we'll be focusing on. So let's do it. So here we are finding out our external range liquidity gets taken out, and the internal range liquidity, we have this fair value gap. We still have another one. So price did not come back to this one. Price went again to sweep this external range liquidity. Let's just mark out the external range liquidity first. Then once we drop to a lower time frame, it will be clearer. So mark out our external range liquidity, the buy side and the sell side liquidity. So do it like this: hold highs and hold low. Those are the buy side and sell side liquidity. So I drop to the 6-month time frame. You adjust it this way like this. So what do you see here? Once price take out this external range liquidity, you should be anticipating a pullback down to this internal range liquidity, external range to internal range liquidity. This is another fair value gap also. All these zones are possible point of interest, possible reaction zone. You understand? So, yeah. So let's work with the recent price action. So in the recent price action, what do we see here? We mark out our buy side liquidity, our highs, then on the sell side liquidity, hold highs and hold low. Let's just mark it out so that we know the range we are trading into. So if we check this one like this now, Okay, for example, now I see this buy side liquidity gets taken out, sweep it, this candle sweep it, then it leaves a fair value gap here, of which the market come back here and mitigate it. But the thing did not mitigate it fully, but at least it mitigated the fair value gap part of it. Then price now move forward, it sweep this one. So if we drop to lower time frame now, we are going to find some internal range liquidity. But for this time frame, what are we looking out for? We mark out our highs and low, swing highs and swing low, the highest high and the recent low, higher high and the higher low, higher high and the higher low. So we mark out this one, mark out this one. Then I don't know if you guys are familiar with candle range theory, CRT. So if you check very well now, I think this is a CRT forming, like candle range theory. See, so this is it. Price has taken out this liquidity. So in that candle range theory now, as price has taken out this one now, we'll be anticipating for the market to come and take out this other side. As price has taken out the candle range high, if the bias is bearish, then our target will be this side of the candle, this candle range low. So let's just add it to our confluence. So we just mark it out, then we drop to lower time frame. Now we have go over to the 3 months time frame now. So in the 3 months time frame, what are we seeing here? You see, I just all this one. Okay, you see fair value gap. See that mini fair value gap here. As price has taken out this one, fair value gap here, so on and so on. But let us just work with the recent price action so that it will not take our time for long. So we have marked out our recent high, recent low, then recent high that gets taken out. So this one now like this is just like a buy side liquidity. You understand? So as price has taken out this buy side liquidity now, we'll be expecting a pullback down to any of this zone. You understand? So let's drop to the lower time frame again. You see how we go from 12 months, 6 months, 3 months, like that. So let's do it in load. Okay, now we are in the monthly time frame. And inside this monthly time frame now, what are we seeing here? We are seeing higher high, higher low, higher high, higher low. You see, this one is lower high because this high fails to break this one. This one is not higher high, this one is lower high. This high fails to break this high, so this one is lower high. And the thing come down, it not break this low. That's to say, at this zone like this now, the market has not shown that, okay, I want to continue the uptrend by breaking this high, and the market has not shown that, okay, I've changed direction by breaking this low. So the thing is just like that. It not make a higher high and the thing not make a lower low. So the thing is still around this zone. So this kind of price action like this now, anything can happen. The market can just decide that, oh yeah, I want to continue the higher high, or the market can just decide that, oh yeah, I want to change the direction. But for now, you see how the thing goes: higher high, higher low. This one break, okay, higher high, higher low. This high did not break this one, so this one is not a higher high. So this one is like a higher low, and this low did not break this low. This one is not a lower low. So this side like this now is just like an indecision zone like this now. So there's no clear direction. It not show that I want to continue the trend, and at the same time, the thing did not show that I want to change direction. So we just work. So in this kind of price action now, what do? We just work with external range to internal range concept, like buy side liquidity. After a price has taken out the external range, where should we be anticipating the market to draw next to? Is to the nearest drawn liquidity fair value gap. You understand? as we discussed yesterday, as market has taken out the buy side liquidity, we'll be anticipating a draw on liquidity to the nearest zone. So of which we find our fair value gap here. So if we succeed to catch any reversal from here now, we can ride it to this zone and take our profit, and then wait for a reaction to see maybe there will be a POI here that can push the market up to continue the trend, or if the market come down here and break this low now, then we will expect a pullback like this, then continue the trend. But for now, we have gotten our buy side liquidity sweep, our external range liquidity sweep. Then where is the next place to go now? Is to check the internal range liquidity. So, and for the internal range liquidity, we find the fair value gap here. So we drop to our weekly time frame to see what we got there on the weekly time frame. Sorry, it's taking time to load, but to load. Okay. So on the weekly time frame, what do we look for? So the same fair value gap, the same internal range liquidity, fair value gap. Then we'll mark out our premium and discount on the daily time frame. So if we check, we do not see any valid fair value gap that has not been mitigated here, unless this one on the higher time frame. So if we check, this one has been mitigated. You can see it's still the same thing. See, external range liquidity, buy side liquidity, then internal range liquidity. Shall we see what we are trying to figure out here? You can see that the same thing has played out here already before. So you can see that this concept is just simple. External range, internal range. You see that after taking out this external range, price came inside the internal range, take out the external range, you look for some internal range here, take out the external range, look for some internal range here, just like that. You will see this side again, sweep it, internal range, external range, like that. So on this weekly time frame, we do not find any unmitigated fair value gap. So we'll still work with this one here. Let's just keep this one in mind. You understand? So then on the left hand side, what do we see? We see another fair value gap here. This kind of fair value gap or point of interest are the ones that do revise the price from up down. Then also this one on this side, we take it up, then another one like this up, we bring it down. Another one, like, let me draw something for you so that you see, like something like this, something like this, something like this, something like this. Okay, let me just do it like this. Same direction, like this, like this, like this, like this. So what I'm trying to say basically is just like this. There will be a fair value gap here, another fair value gap here, another fair value gap here, another one here, just like that. Then another one here, like external range to internal range liquidity, external range to internal range liquidity, external range to internal range liquidity. You understand? Like this. So okay, so let's start from here. So after market sweep some liquidity here, take out an external range liquidity, price draw back to the internal range liquidity. So this internal range liquidity now push the market up to sweep this high now, to sweep this high here now. So then at this side like this now, if you check on your left hand side now, you see some fair value gap or some point of interest there that will now push the price, that will now make the market to reverse from here down to this POI, and this POI now will now push the market up and break this one, and there will be another one up here that will reverse it. That's just how the market move up like that. Then This one will not push it down. This one will take it up. Another one will be here to push it down. Then another one will be here to take it here. And this one now will push it down. Then this one will now push it up. Then this one will push it down. Just like that, like that, like that. So that's just how basically the market do move. So just the same thing we are seeing here. Just the same thing I are seeing here. If you see that, okay, the market is currently reacting to this one. Now, this one now can push it now down from here. Then also maybe anyone around this side can take it up. Anyone up will take it down like that, like that, like that. So that's just how the market moves. So let me wipe this thing out. So we have taken out a buy side liquidity. So what next? We'll be expecting a reaction at this zone to take the market up, or to continue the or for the market to change direction. So we have taken out the buy side liquidity, where next we'll be expecting a reaction from here to push it up. So, and at this zone, on this weekly time frame, we will not see any unmitigated fair value gap, except this one we see on the monthly time frame. So in that situation, what do? We'll move to the next time frame by going to the daily time frame. So on the daily time frame now, a daily time frame will now tell us the exact zone to position for. So inside the daily time frame now, what are we seeing here? Okay, let's study the market from this side. So what are we seeing here? Market moves like this, up, this one like this, up, this one is balanced, up, fair value gap here, other block, push it up, balance, clear, up, balance, like that, like that, like that. So all these zones are all balanced. All these zones are all balanced. You can see it's balanced. All these ones are all balanced. If you can check here, this one also is balanced. This one is balanced, and this one, I think this one is balanced too. Okay, this one is balanced, so we don't have any issue around this zone. Then here now, let's check. This one not sweep liquidity, so we'll not consider it. For us to measure our premium and discount, price has to take out a buy side liquidity. This one is internal. See, you see that the thing not sweep it. See, so we are not going to measure it like this. No, we wait for it. We have to wait for market to sweep it first before we measure. So we draw our Fibonacci tools from here like this. Like this. You see that market not balanced. So in that situation, that in a situation that the market not balanced like this now, what do? We have to drag our Fibonacci to the next swing. What happened? This retracement coming like this, it not trade to the 50% zone. What next? You have to draw it to the next zone. So this is how our Fibonacci tool should be now. Like this, how our measurement should be like this now. You understand? This is how the measurement should be, because all these zones are all balanced. All these ones are all balanced. This one is balanced. So the place that the imbalance started from is from here. Market not trade to this 50% zone. You take it to the next one. It not trade to it. You cannot place it here because this one is an internal range liquidity. Like the market not take this high out, so you cannot measure it. You cannot keep it like this. No. So we'll keep it like this. You understand? So this is the point that if you want to test for reversal, this is the point. And you can see that that same zone has overlapped with the monthly point of interest that we see, with the monthly fair value gap that we see after the sweep of liquidity. So let me take it to the monthly time frame so that you see it clear. So you can see the monthly fair value gap. You understand? Liquidity sweep on like we discussed yesterday, liquidity sweep, the nearest point of interest after the sweep, This is the internal range liquidity. After this external range liquidity, this is the internal range liquidity, and the internal range liquidity has now overlap with the fair value with the premium and discount. So you can see that it's a high probability zone. So let's go. I think my network is slow, but it will come up. So can you guys hear me? Can you hear me?
Yes, we can.
If you can hear me, just okay. And it's clear, Abby? Are you understanding what I'm saying, right?
Yes.
Okay. So if you want to get any reaction now, it's from this side like this. You can see that everything is now coming together. This point of interest, this one like this. So if you get any sell from here now, if you want to swing now, you can swing it to this side. You understand? But now, as a day trader that you are now, you can still work with this range like this now. You can still maybe you can work with this range like this now. If you want to take maybe like any short-term position now, you can work with this range like this now. Sweep of liquidity, nearest point of interest. You see there's a fair value gap here, nearest point of interest. So you can work with this one now. If you want to take a short-term sell, you can sell from here now and close here, like that kind of thing. For the short period of time, you can do this one like this. It's still possible. So after this sweep now, there's a nearest fair value gap here. You understand? So if you go over to the 4-hour to 1-hour time frame, that is the point of which we look for our point of interest. You understand? 4-hour to our 1-hour time frame is the point of which we look for our point of interest. You understand? So and now, so if you are working with this recent price action now, you can just take it from here like this now. If you want to work with the recent price action now, after this sweep, this is a drawn liquidity. After this external range liquidity sweep, this is the internal range structure now, of which the fair value gap now. So if you want to work with the recent price action now, you now take it like this. This is sweep. If you can check like this now, the market was in an if you can check like this, the market was in a downtrend, a lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then now, so the market now come and sweep this protected high, this lower high, of which in a downtrend the lower high should be protected. You understand? So now, so the market now come and sweep this side, sweep this one to show you that okay, the direction has changed. You understand? So now we are now bearish. We are no longer so now we are not bullish. We are no longer bearish like this again. The trend has not changed from downtrend now. The trend has not changed to an uptrend. So you see now from here now, lower high, lower low, and the thing now come and clear this lower high, of which supposed to be protected, and still clear this one again to show you that okay, direction don't change. So this one can be your MXS. This one can be your MXS. So like the market has changed structure, market structure shift. So after an MSL, what do I say? You make sure so that you know the right side. So if you want to look for any buy now, it's from this zone like this now that you look for a buy. Your point of interest from here, then you buy up. So you see. So now from this zone now we are now in an uptrend. So lower low, abi higher low, higher high, higher low. Should we see this one? This is no clear arm. this position at the inside that itself, you know, clear. Shall you see? Let me draw it out. You see? Shall you see? So you know, clear. If to say this thing now come clear now, it means say we don't see change to downtrend again. But see, I'm letting no clear. So we are still in an uptrend. So higher high, higher low. So this one will be a higher low. This one will not be a higher high. And after the sweep, you check for your premium and discount. After sweep like this, you will make sure your premium and discount so that you will know whether you dey buy for cheap price. So this side like this, you see. So now this side like this, now you're supposed to buy from. You see, I see as the market react from here. If you go from your 4 hour to your 1 hour time frame now, you will see point of interest here. So see breakout block here. So now this breakout block, the thing take real that day. Me, so I no be know that day. I can't do it for this other block for here. So I'm using this setup for here. Then I catch another one for here also. So market react from this breakout block. You test your MSS from here, you go up. So higher high, higher low. So now the higher low now be this one. This lowest point before market come break this one now. So now this one will be your higher low. So like I said, after this sweep of liquidity here, and we have a fair value gap here now. So if you want to check your premium and discount now, you go take them from here. From here. You take them from here like this. Maybe see. Say this one come to discount zone, this fair value gap the discount zone to show you say everything just will come together. You understand? So you see, so you say everything done clear now like this with that now. So you can test your reversal from this zone like this. This zone after this sweep and fair value gap, after external range liquidity, internal range liquidity, and the thing on the discount zone. So from here like this now, so you go mark out your point of interest. You go look for your point of interest. So let's look for the point of interest. And our point of interest, what we use as point of interest, order block or breaker block. So if we check this is a breaker block. I hope all of you know what the breaker block is. Order block will fail. So if you call this one your breaker block, then this one your order block. See order block here. See order block. We get fair value gap. So you see, this one can mitigate them, but the thing not mitigate the candle. So this one still valid. So you go mark them. You go look for them from 4 hour, 3 hour, 2 hour, 1 hour time frame. You understand? So let me go to so we have found one here. We have found another one here. So we go to the 3 hour time frame now to look for the next one. And if you check well now, you see say we don't see one already for here. Other block we get fair value gap here. So you see. So you can carry this one and come here. You know, say this one and this one they near themselves. So you go pick the one where they a probability. If you see breaker block and other block they near yourself together, you go for other block. Understand? Other block you go for. So you pick the other block, then you mark it out. Then so if you check where now we don't get any point of interest here, then we'll go to our 2 hour time frame to check if we still have another one. So let's see. Okay, on our 2 hour time frame, what do we have? Let's check it from down here. Okay, we have one here. So you can adjust it here, or you can still draw another one here. But if you still draw another one here like this, you are not wrong. If you draw another one here like this, you are not wrong. If you draw another one here like this, you are right. You understand? But to make your chart clean, this one and this one no far from each other. You understand? Anything we make market don't reach this side, you know, say you don't already reach this one also. So just go for this one. Just go for this one. Then let's check. This one don't mitigate, so we know if pick am. And for here, this one will be our kind of other block we use, so we know we choose that one. Then we'll go. So on this 2 hour time frame, no see any other block. Okay, C1 for here. C1 for here. Okay, this zone already passed now, so we are only focusing on here. From here, we are only focusing from here down to this zone. So this is our range that we are trading from this zone to this zone. So there's no any valid one. Then we'll go over to the 1 hour time frame to see if there is any we can adjust. Okay, so inside this fair value gap now, there's one here. You see, very straight. If you know there, no force am, no understand. It's clear. So we found one here, found another one this other side. Then let's check again. This one is not the kind of other block. This one is not the kind of other block. So we have come to the end of the POI location. So from 1 hour to your 4 hour, that's where you look for your POI for currency pair. But for gold, you can drop to your 45 minutes. So what next? Let's label it so that to be clearer. So if you are looking for any sell now, you can sell down to any of those point of interest as your target. You understand? As we have already said, you sell at a premium price, you buy at a discount price. Normal market illustration, you go on sell when the market is high price. Nobody wants anything for a cheap price now. So when market is high price from here, after I don't make sure premium and discount, nice premium and discount go separate time to tell you whether you did for where market is high or you did for where market is cheap. So now like this, we did for premium zone where market is high price. So now this high price side now, we're supposed to sell, not supposed to buy from this high price side. We are supposed to buy at a cheap price here, then sell at a high price here. You understand? So at this point like now, I'm supposed to look for sell. So I will take get our sell entry from here now. So let's go back to our 4 hour time frame. Then we'll frame our buyers from here again. We'll frame our sell buyers. So if you check from this 4 hour time frame, which you see higher, lower high, lower low, lower high, lower low. Shebi say this high now no come break this one. Just to tell you say, oh yeah, the sell don't confirm with that. So you see lower high, lower low, lower high. Understand? Lower high and lower low. So and if you measure them like this now, price balance for here. The market is balanced. So this zone like this, they balance. So where next after this sweep now, this one now will be our sales buy side liquidity. This one will be our sell side liquidity, and waiting to happen after price take out the sell side liquidity, waiting to happen, it will come up here, any of this zone here, like from here to here. Now here we will look for our sell position. You understand? So if to say market don't open now, so we say market start to reach from here now. So if you just make sure from here like this now, so if you measure from here like this now, so you go on sell from here, sell for premium zone high price. You understand? So if you say the market open and at this side now, supposed to look for our sell entry from. So now, so if you get yourself start to sell from here, come this 50% zone, or come this POI zone, or come any of this zone here. If you take your profit from, if you see any sell from here, if you take your profit for 50% zone, or you take your profit for this point of interest. So make I delete this fair value gap because I don't already sort them out here. So if you say come here or here or here, then the market don't clear this one, I know say, oh yeah, we are going for a big sell now. The market also clear this one. You know, say we are now selling heavily. So we'll wait for pullback and we'll start to sell. But for now, let's join what the trend is saying. The trend is currently bearish here. So we'll sell from here. Then if you want to track your order flow now, go your 15 minutes or your 30 minutes time frame. 15 minutes or 30 minutes time frame. That's where you track your order flow from. So on this point now, what you will do, this kind of sell position, I always catch and I don't know how this one, I miss this one that the thing around leave me unaware. If not, this kind of say I always catch and where this kind of reversal. If not, as market don't sweep like this, what I always do, I make sure like this, then I position for 50% like this. I just sell from here like this. And then put your stop loss above. Then I just sell like this. I always catch this kind of trade. I don't know why that the team miss her. As I miss her, I can't wait for one other block around the zone. And again, for this USDJPY market always they like to react to other block on the higher time frame, like 4 hour, 3 hour, 1 hour time frame. If you see any other block like that, so market they always like to react from there. So let's check 4 hour to 1 hour time frames. We could see whether we'll see any other block so that we will mark out, because as market they open like this, so it will always like to come for other block and all this kind of other block like this. So let's mark this one out, because as market they open now, if you just first open down, come down small, or if you just open, come here now. So now from here now, if you start to sell, come down. So still take note of that one. Market they always like to use those higher time frame order block as entry for this USDJPY. Always. So even this trade also, let's see. Market will come back to that one on the 2 hour time frame. Which time frame see? You can see another one here also. So have it in mind that market will come this one also. It is possible, because now this one I've been away for that day after I miss this from here. I've been away for this one that if you check my channel I post that. So market will come this one. It's possible, or if you react from this one. As this zone don't balance like this now, so if you react from this one here, so it's possible. So what are we going to do? Let's just mark it out and get our reaction from. As the market open like this now, so no go say you want to use order flow, take catch any entry from here like this. Now this higher time frame order block you go use, because if you try to say you want to use order flow catch now, that manipulation market will come on you. If you want to use maybe like order flow now, because if now order flow we want use for here now, if to say the market still dey open now, maybe say market never close now, we can show you entry where we suppose don't get for here. So you see our basic order flow they trade now like this. For this down trend, sweep like this, go back, sweep like this. The market will come react from here. Come either it will react from this zone like this. It will react from this zone. Make sure say the thing they balance. So either it will react from here like this, come down, or if you use any other block with the around this zone. If you can use this one as inducement, then use other block around this zone. So if to say we want get one entry now like this now, so how would they get entry? If to say market still dey open now, that day, so I miss this one also, because the thing be they go like this. See, I can show you something. When they go like this, higher high, higher low. This one is the high. So no, if you consider this one, if you talk something higher high, no, this one will be the high. Then after this high now, wetin happen? They pull back. See they pull back for here. Then after this pullback now, so it just do like this now, like this. If you want to take canal like this, first swing. The second one like this one. Here, no put am for here because this one no break this side. So now for here where it break, then come start to give you retracement. See the retracement comes small, but balance. So it comes still come up. So we put am for here. So now like this, see that phase 2 I dey tell now that yesterday, say market fee sometimes give us phase 2. So if you check am like this, so this one fit be your phase 2. Okay, let's take the candle. Okay, this candle no reach 3 candle swing. 1, 2. So now 2 bullish candles, so no reach. If you see na 3 candle now, this one for be our phase 2 entry for here. Then now, so if this one be our phase 2 entry, imbalance entry, we say price no trade after this sweep, market come down, we say no come to this 50%, waiting come break this high now. Now here supposed to be our phase 2 entry, and after the phase 2 entry, market comes to this one. Should be the market still come back, come this same zone where I tell you, say if you say you set your break even now, if you say you take phase 2 for here, quickly set your break even after this one, now market for can't take you out, come out. So you see, so this one swing higher low, higher high, higher low. Then our entry now, after market can sweep this one, our entry now will be here. Our entry will be for here. Then our stop loss. See that thing I try tell now yesterday about stop loss. So as this low there now, supposed to be your stop loss for, okay, let's say maybe if it's supposed to be your stop loss for here or for here. Then now, so you will look for the next candle. If you see now here, you want to put your stop loss now. After this, your stop loss zone now, where the next candle waiting, see the next candle for here. So now there you put your stop loss for here. Or if now here you want to use as your stop loss. After this candle now, where the next candle where they lower than now. If you check this one they lower than this one. So if you check this one now, where be the next candle? No be this one you go choose it, because if you choose this one now, this one no. So this is this one already sweep. So now the next candle wait there after this one, next candle wait there after this one, I let your stop loss. So where be the next candle? See the next candle for here. So you will put your stop loss. Either I put them for here like this, so that to avoid that manipulation. But for this entry, if you say I mean, I will just put my stop loss for here. I'll put my stop loss for this candle. Then we swing to the next, draw on liquidity. Then now, so make sure you are trading in line with the trend. No go trade counter trend. So we say this one a counter trend trade with that because now, so you say market don't already show you say, oh yeah, we are now bearish, and you can't see bullish order flow for here. You won't come the buy for where market where they say you won't come the buy. You go first give you some more profit. Should see say the entry go work, or should you say the entry work, but what's happen the thing no last because your bias they wrong. We are in a downtrend, so no concept for downtrend. If we did for downtrend, just wait, make price come your premium zone before you sell. If we did for uptrend, wait, make price come your discount zone before you buy. So you see, so now our entry is supposed to be this one. Then if you want to sell, come this point of interest here. Now if I want to do that, I want to sell, come here, then come. I want buy, come this place, then come sell from here, come down. But now, so that was say that day, so market don't pass my trading hour like around that 5 o'clock. So I know you take in trade after that time again. So I just leave her before I can wake up for morning. I can't see market don't invalidate. So as market invalidate like this now, so if you want to take an invalidation entry, so this entry where you use for your buy now, then go be the same entry for your sell. If now invalidation entry they take, the same entry for your buy will be the same entry for your sell. So as you try buy for here, one go up for your website, the thing can't fail. Now this same place you go still sell from the same entry. So if you check our boss channel polarity. Is saying that thing they do always in case you get invalidation. So your same entry for your buy would be your same entry for your sell. Then you put your stop loss here. Then you target the nearest drawn liquidity. But me, so the reason why I not take this on that day because this other block way there. So now this other block me I can't wait for that day. So because after that invalidation entry, so most time market still they come back to run. Market still they come back to this zone, can't give you proper entry. So now here I can't wait for that day. As I see the market invalidate for here, now here I can't wait for before the thing can pull back up here like this, can start to go down. Say I don't miss this one, or now so now this place now. If to say won't take any entry now, so any academy order flow entry now here will be your entry because you see like this one balance. So you see this one like this balance. This one is balanced. So you see, so we are next again here. This one is balanced. So you see, so your entry now suppose there for here. Then your stop loss go there above this side. After this side, the next candle, which candle there? This black one. So you put your stop loss for there. Your stop loss for there. But if the stop loss too much for you, if you use this other block for here, this higher time frame other block in here, like I talk that time. See, market if you open now, come for this other block. So if to say market don't open now and I want to take any entry now, what I was supposed to take with this? What I will take with then I will swing to this 50% zone, or I will swing to this point of interest here. So you see, very simple. Very simple. So you see, what I was supposed to do with this? As simple as that. So if to say market open now, so I will wait, make us wait what the market won't do. Even also now normal entry with it. If to say market never close, this one is balanced. Then after the sweep, now here I'm supposed to take my entry, but if the stop loss too big for me, if I want to refine now, I feel use this other block for here. But normal now here I'm supposed to take am from. But see 29 pips. But you know bad though. Now just position now just this thing we use solver position size, you just reduce your lot size, then you take am for here. Or if you want plenty RR, you just position for this other block here. Then your stop loss above this side, the next candle. Then you target the next target is 50% or this drawn liquidity or this one or if you want to pack everything off for market, if you want to carry the $7 trillion inside the market, only you fit trade and reach this side. So that's it, my bros. So I hope it's clear. Can you guys hear me? I hope it's clear. Hello, can you hear me?
Yeah, we can hear you.
Okay, so I hope my explanation and my bias, everything, they think clearly.
Yeah.
So if you want to carry out the 7 trillion, if you just target here, or if you even target this SI liquidity, so if you want to take everybody out. So that's it, my group, for my bias on USDJPY. So okay. So another person should come and analyze for us so that we see from his side. Then if there's any correction or anything, then we can take it together from there. So let me save this recording first, then I will record the other one again.